Hi everyone, your Tampa Bay real estate expert and realtor Lance Mohr, and in this video I want to go over what are closing costs, how do they work, what you need to know about them when you're buying a home. Alright, so let's talk a little bit about closing costs. The reason why I wanted to do this video is because we're in a really good real estate market, and I know a lot of realtors are really getting complacent in the market, more on the listing side than the buyer side, but a lot of lenders are really getting complacent. They're just telling people to go to their website, they're having them fill out an application, and they're giving them the good faith estimate that has the closing cost on, and they're just not really explaining everything to them. So first off, before I get into the closing costs, I just want to let you know, is you've probably been watching these videos, I'm not a super big fan of big banks, especially like Bank of America. And the reason is because in my experience from being in lending and being in real estate over 20 years, they have a lot of internal problems, and a lot of them, I don't want to say all of them, a lot of them have a hard time closing deals on time. And the loan officers, because they're just sitting in the office, they're just waiting for business in a lot of cases. Again, not all of them. I would rather go after someone who's actually hunting. In other words, someone who's actually on the street going for business, like a mortgage banker or a broker. But anyhow, I want to let you know the difference between a bank, like a Bank of America, Wells Fargo, and a broker, when you're looking at the different closing costs, is banks lend their own money. They have their underwriters, processors, usually closing departments, a lot of these in-house. So their interest rates are going to be a little higher because they're putting rates out there at retail at regular pricing, but their closing costs are going to be less. When you go over here to a mortgage broker, they get the pricing at wholesale, so the interest rate may be a little lower. Now, when I'm saying lower, I'm not talking 1/4 or 0.5%. It could even be anywhere from 1/8% to maybe 1/4%, because remember, all banks get their money at the same place. But their closing costs are going to be higher because they have to charge money for an underwriting fee, a processing fee, a closing fee, etc. So just keep that in mind when you're looking at your closing costs. Now, when I say closing cost, I mean the cost that it actually takes to close a loan. So I break it into two different types of costs. All right, there's two. Number one is the reoccurring closing cost, and number two is the non-reoccurring closing cost. So let's start off with the non-reoccurring closing cost. These are costs that it actually is going to cost you to get the loan. So stuff like the loan origination fee, a processing fee, an underwriting fee, a document preparation fee, a closing fee, a survey, an appraisal, maybe the credit report. Now, this is obviously if you're getting a loan, the credit report. And you're going to have difference. In Florida, you're going to have intangible taxes that go to the state and other state taxes that are going to go to the state. Okay, these are going to cost you money. Now, I just want to give a side note right here. If you are buying a new home, and this is very important to know, builders aren't going to tell you this, your realtor may not tell you this, but if you're buying a new home, pretty much any state out there, there's going to be two additional costs. One of them is going to be transfer tax fees. We call them deed stamps in Florida, and in Florida there's $7 per thousand because the builder does not pay those. The other thing they don't pay is they don't pay title insurance fees. So the owner's title insurance policy, builders don't pay that. That's $5 per thousand plus $75. So just keep that in mind. If you're buying a new home, you're going to have to pay those fees as well. And the builder's going to give you incentive money to pay those. So anyhow, those are what's called one-time fees. Okay, they're non-reoccurring. So it's not going to reoccur. You're going to pay them one time. That's when it costs you to get the loan. Now, the other one, your reoccurring fees, are going to be like your 1-year hazard insurance. So if you get hazard insurance, let's just say figuratively it's $1,000 a year. You're going to get hazard insurance. That's reoccurring. You're going to pay it up front, and then you're going to make the payment, your principal, interest, taxes, and insurance, the I, P-I-T-I, is insurance, you're going to be paying that every month. So when you get to the next year, well, that money's in there to be paid to the insurance company. You're also going to have reserves in there. Banks, usually it's a formula, but it's about 2.5 to 3 months of reserves. Some people say reserves, some people call it escrows. And what that's for is in case you default on the loan, they have a little cushion in there. So these are what's called the reoccurring fees. So it's just important, and especially I go over this a little bit more in detail in one of my refinance videos because it's very important to know. So it's good to understand closing costs, reoccurring fees, and non-reoccurring fees and what they are. And especially if you're buying with the builder, you need to understand. You don't want to find out at the title company that the builder's not going to pay your owner's title policy or your doc stamps. So I hope this was helpful. If it was, or if it wasn't, leave me a comment below. Let me know what you think. Is there any videos you would like me to do? Anything, any questions you have or anything. So I appreciate you watching my videos. If you have any questions whatsoever or need an agent in the Tampa Bay area, reach out to me. I'll put my contact information below. I'll put my contact information above. Have a wonderful day, and I wish you the best of luck.